Hello, everyone, and welcome back. Listen, I have another scenario here, and we're going to walk through what this client is doing with their first position HELOC. All right. I know a lot of people, they have concerns about the first position HELOC. They don't know enough about it, but I want to dispel all of those thoughts that would tend to have you have the bank's schedule instead of your own schedule, paying by the bank schedule instead of your own knowledgeable schedule. All right. Listen, this person says, before I get into that, listen, like, share, and subscribe this all over the place because we need this information disseminated throughout all the land. Okay. How to pay off the mortgage, not in 30 years, but in 5 to 7. He said, I'm closing on a HELOC, which will cover my entire mortgage, thanks to your videos and a lot of research. Good job on you. I expect to complete this mid-September. I was concerned when I found out I had to transfer the money from the checking account and was unable to make a direct deposit into my HELOC. Wouldn't that be awesome if you could, though? In addition, in the state of Texas, the minimum withdrawal is $4,000. I will pay my bills through the credit cards, about $2K a month. I will pay off the credit card monthly in advance with the $4,000 I take out once every 2 months. Based on what I understand, I need to put my payroll check in the HELOC each pay period, which pays down the HELOC. Do you see what this guy is doing? Huh? He's doing the velocity banking method. Look at how simple he does it. Pull $4,000 out of the HELOC every 2 months to pay the credit card. I will pay the credit card off. Watch this, y'all. Before its due date, and not have to pay interest on that credit card interest, CCI. Is this a solid approach to paying off my mortgage within 5 years? Let me tell you, that is a solid approach. But what I'd like to do is give you a free analysis to see if we can't pay that mortgage off quicker. Because since you got approved for that HELOC, that first position HELOC, what I'd like to do is give you a free analysis to see if we can't pay that off even quicker. Just let me know. info@velocityc.com. Thank you so much for your comment. Let's go ahead and break down what you're doing. He said, forget my mortgage. I want to eat up my mortgage with the first position HELOC. I want to eat up the mortgage. Okay? I want to eat up the mortgage with my first position HELOC. CJ, that's what I am going to do. Now, had you had taken our classes, you would have known what questions to ask for those HELOCs. We go over the withdrawals, okay? Asking for the withdrawals, the percentages, and everything. But man, you are still sitting pretty. Why? Because look, $4,000 withdrawal, okay? And listen, if you need more instruction in that as well, info@velocityc.com. But what you're doing is a solid approach, and no doubt in my mind, without even knowing the loan, the mortgage security that you have, right? And your expenses or your income, without even knowing that, I want to tell you, you have a solid approach, okay? A solid approach to devouring all of that debt within the 5 years. Now, if you have other pressing issues, right? If you have other pressing debts, what I would do is I would make sure that I prioritize this debt according to what? The CFI, the cash flow index, which tells me that if I have a loan balance and a minimum monthly payment, then I need to divide that loan balance by the minimum monthly payment so that I can get my CFI. If my CFI is between 0 and 50, it is in the danger zone. It's a danger zone loan, and you need to get rid of those quickly. Okay. If my CFI is between 51 and 99, then what we can do with that one, okay, it's the caution zone. We can restructure, we can refinance, we can ask for lower interest rates. I even have a calculator that shows you how much interest you're going to be paying out monthly, and you would be surprised at how much 10% interest difference or 7.5% interest difference can mean hundreds of dollars when you're talking about capital. Okay, so this is the caution zone. You want to restructure, you want to refinance, ask for lower interest rates. If it's 100 and above, which I'm guessing your mortgage is, then that would be the last priority. So this is listed in priority 1, 2, and 3. Does that make sense? Yes, that is a solid approach. So what he's doing, folks, is he's making sure that he's paying his credit cards, right, with the HELOC. But CJ, what about his HELOC? Who's going to pay his HELOC off? Watch this. The income that he's making is going to be placed within the HELOC so that he keeps that capital circulating. He keeps it circulating, all right? That's what we need to do. We need to make sure that this money is moving and that the cash flow that stays within these lines of credit, the HELOC, the credit card, the credit lines, all these revolving lines of credit, and make sure it's revolving, folks. Absolutely. Make sure it's revolving. Oh, CJ, mine's not revolving. Get with me. Get with me. It's not the end of the world. Whenever you're talking money, there is a solution. Understand? Absolutely. Get with me. info@velocityseed.com, or even leave a comment below. We'll get back at you, okay? Go ahead and email me like Anthony did at creditwiz@investorpro.org. We'll make sure, okay, that you're taken care of, all right? Listen, this is what he's doing. The income goes inside of the HELOC. The HELOC pays the credit cards. And he said this, and I want to make sure you get this. He said, CJ, not only am I paying off the credit cards, I'm paying them off before the due date. Before the due date. Ladies and gentlemen, what happens when you pay the credit cards off before the due date? Interest need not apply. The interest doesn't apply when you pay the credit cards off before the due date. So even if his credit cards were 20, 30, 40%, he wouldn't have to pay a dime in interest because he paid them on before the due date. Now, remember, whenever you're talking about interest rates on credit cards, what matters? The timing in which you pay, right? The timing in which you pay. So if you're paying them before the due date, no interest. If you're paying them after, like if you're keeping a balance on that card, which is great as well, as long as that cash flow is paying it down and not your monthly income. That's very important, folks. Make sure the cash flow is paying it down because it's not doing anything but sitting there anyway, right? Why would you have all your money, thousands of dollars, inside of your checking account, inside of your savings account, and you've got these massive debts? It could be working to pay down that debt, okay? And that is exactly what he's doing, okay? He's working to pay down his debt, and really, when you're talking about a HELOC, you just swallowed up this amortized interest with simple interest. Is somebody going to make this a t-shirt or what? Should I make a t-shirt out of this? Huh? Absolutely. I also have a t-shirt that has the questions about if you're getting when you're getting a HELOC, the questions to ask. Absolutely. So let's go ahead and make a t-shirt out of this. And folks, if you have any questions, don't hesitate to get with me. I would love to answer your questions. All right. There's no question too small or big for Velocity Consulting. You guys have a great day, afternoon, evening, wherever you are in the world, and we'll see you soon. God bless. Take care.